Boom, we are alive, ladies and gentlemen. Thank you for joining us today. This is Tio with the Arcane Bear. We're going to go over and we're going to be taking a look at some of the market indicators. Looks like we are maybe just entering a spring of a reaccumulation range here for Bitcoin. So this is going to be a crucial area for us. If this fails, it means we'll be coming down further. So we'll have to keep a close eye on that. But for now, let's actually go out to the daily chart here on Bitcoin and revisit the story that we've been watching here for the last few weeks. So you guys just shared some awesome charts in the private bear den, some great conversations around this particular accumulation range. One of the difficult things is being right about the accumulation ranges early. It's usually easier to wait until you've broken outside of the trading range and continued along your way before you make any too big of large assumptions. But ultimately, again, what we're basing this off of is the strong primary selling climax, the preliminary support selling climax, and this spring here as the first kind of part of our trading range. Now, we've seen arguments about this being the automatic rally, and this is only a secondary test. So there's some people talking about like a right hand head and shoulders like this. There's a potential for that. I still think we're in the final parts of the SOS. So it's at the 45-minute chart that this starts to look a little clearer. I believe we are just entering a spring here on this accumulation. So the preliminary support could be all the way down here for this particular trading range, but nonetheless, there are a few pieces that are important here to keep an eye on. Number one, this reaction and these reactions here, boom, boom, were quite thin. And over the last 48 hours, now this is not a hugely positive sign. We've seen an increase in selling pressure up until this last little bit here, where we were kind of peaking out, and it's a little clearer on the 15-minute that we've hit some absorption and stopping action. We can see big chunks of supply coming in and limited price spread to the downside. As a matter of fact, if we look even closer here, we can see price spread or volume increasing and price spread is actually diminishing. So here on this final spread, the supply line and signature is quite large, but the price spread to the downside is basically equivalent to the previous two down steps and with more supply. So this is looking like a spring action to me. We've seen this many times in the back before. You'll see kind of a shakeout test like this. I believe Bear Den Jerry actually had drawn it up in the charts. So maybe I'll quickly bounce over to our private group so I can share his drawing. Now, this is not exactly where I think we're at because we didn't hit the spring. Here, this was making the assumption that the SOS would go outside of the box and you'd have an LPS on the top of the trading range. Here, it looks like we're getting a spring down to 23,000. So there are ways to take this into account. I think I have all of these PDFs open. We've seen multiple reaccumulation ranges that do this, but just as an example, if we don't make it back inside this trading range, we could come back down as low as $18,000. So this is kind of a big make or break moment over the next 24 to 48 hours, in my opinion. I thought we'd be already at 28K. I thought we would move there very, very quickly. Obviously, that's not what happened, and we are sitting at what I think is the last part of this reaccumulation range. Just trying to dig around in the background to find this specific one. It looks like it's I've lost it or something. I'll have to come back and take an assumption here, but basically the last part of the spring, I can show you guys what I'm looking at. I just was looking for reaccumulation ranges, and there used to here it is. Yes. So this is actually a really nice drawing. Who shared this? Mr. Anderson. This is actually quite recent. These are all over. You can find these all over the internet. This particular one here is the one we're looking at. This number 2 here. See how the spring comes down below the box and actually below the ST as well. I suspect that's what we're getting. That's what we're getting here. So this would be your first secondary test or your first automatic reaction, depending on how you wanted to draw it. So I'm going to actually use some straight lines here for this, so it doesn't look like a child's Picasso piece effectively. Well, let me draw on top of the point of control. It's kind of annoying. Okay. So something like this. Why is it doing that? Okay, so something like this. So this is kind of a wider version of this reaccumulation, but as you can see here, we're now touching back to the secondary test, which is fairly equal to what we saw this secondary spring after reaccumulation. So I think it's something similar to this. I think we could come low as this 23,500, and then I think we'll be coming back up very quickly. And again, we don't like that there's more supply increasing here. There's definitely new supply coming into the market. There are definitely people taking profits. There's probably a lot of people jumping into shorts from this particular place as well. So this particular move, I suspect, is what will come next. Now, the thing that would invalidate this and what we're keeping an eye on is if we come down here, come back up to, let's say, 24,000 and can't get back above into the middle of the trading range, then we could come back down to 21,000, maybe even lower to 19,000. So this is a crucial part for the continuation, and we get to find out were we incorrect or were we correct about this being the spring in the test. Now, again, I think that they are, just based off the supply signature remarks here, and especially this decreasing supply line throughout the primary, the micro SOS that we just went through. We're almost totally reset on the RSI for the daily, which in itself is impressive. Now, I see Barry's talking about bearish divergence on the daily. In the beginning of a bull market, it's basically impossible to make use of the RSI. You can go through and find studies like this. Here, as an example, we have our, I don't know why our selling climax ended up way over here, but nonetheless, there it is. Here, you can see throughout this trading range, we had bearish divergence all the way up to $60,000. So if you had been exiting trades based off bearish divergence in the RSI, you basically missed a huge chunk of the upwards momentum, because you had bearish divergence on the RSI from December all the way until April was the very last one before the price broke down, and you had a full reset of the RSI on the daily. So we haven't seen a reset on the RSI on the daily. I'm not sure if we'll get there. And on the 6 hour, almost about to be reset. And on the 45-minute and the hour, we are basically totally reset. So this is what, again, leads me to believe that we are in a reaccumulation portion of this channel here. Again, the fact that the price spread is reducing, even though we see a significant amount of supply coming in, price spread is reducing, and we just reset the RSI here below 27. So I do suspect that we'll see some turnaround and more absorption. Now, if, again, I don't like that there's more supply coming in here. Not a hugely positive sign, but you would expect this. A lot of, there's still a great argument, effectively like, oh, if you had entered back at the spring here, for a lot of these positions, some of them were already up over 10x, like Fetch and Magic are pretty close to 10x. Here, Bitcoin's a nice clean 50% since the November lows when FTX crashed. So it's a huge move in a multi-billion-dollar industry and asset class. So it could come back off. I mean, again, we could come back down to test the previous lows at 17 grand, but that's not my current assumption. My current assumption is we've had a large change of character into bullish momentum, and it's going to continue that way, and we're going to get oversold on the RSI, and we're going to run through divergence probably on the daily for another few weeks here. So everything looks still good to me, but again, the last concerning factor is if we break up after this little absorption starts to take place, we can't get back above even the 200-day simple moving average here in the 45-minute would probably be a good indicator. We couldn't do it right there. We were pushed back down pretty quickly. So it did try to test it once already right here, but we are still in the trading range. So nothing is broken. And again, the important part that I'm watching here is that the RSI itself has reset on the 45-minute and the 1 hour chart. And that's with increasing supply too. So again, even though you're seeing increasing supply, the price spread here has actually been reduced. So we are seeing absorption within this trading range. One of the other things I wanted to take a look at while we were here today was the S&P 500. you guys had shared a chart. Maybe actually I'll even share that too, from someone on Twitter. It's nice to see so many people paying attention to the Wyckoff accumulation and trading ranges now, even though, just like myself, many people are very new at it. I started really focusing on this type of mentality in 2020, and it was very good at reading many of the bottoms. The tops of the markets are not, I'm not as good at calling. We could make some psychological reasons why that's the case, but nonetheless, this descending triangle here, or sorry, this descending widening wedge here, we've been watching for quite some time now. My argument here is that, let's go to the weekly. This massive accumulation range, basically between 2000 and 2012, that sent us up into this bull market, I don't think that we just basically go straight down. I don't think that the S&P 500 just breaks down from here and comes all the way back out down. If it does, we're going into not just the largest recession, but the biggest breakdown in financial stability in our economic history. So this would dwarf 2008. If we were to drop that much, many companies would go to business. And I think that this will happen one day, but ultimately what I do think will happen is we come back to all the way to the top of the trading range. And I said this when we were way up here, is I think that we are going to come down and we're going to create a larger trading range. You can watch all my videos where I say this. I suspect that this is what we'll get, and that we're going to see from here a much bigger breakdown story. So some people's arguments for, let's go back to the one you guys shared this morning in the private group, just for fun. One of y'all shared a tweet that was making the argument that we are not done the test. And you guys made this argument as well for Bitcoin. Now, there are things I think that don't align here. First off, these people are only paying attention to the structure and in no way, shape, or form are looking at the volume or supply signatures. And that's usually a red flag. To me, it means they're not looking at the most important part of the structural capacity here, which is actually the supply signatures itself. So if we do take into account the supply signature, it's likely that this is your selling climax and that this is a low volume spring. Now, why does that make the case? Now, we actually had a really good conversation with Todd Butterfield a few days ago. You can watch our charts, our conversation with him on the podcast there. Let's get rid of this downwards trend line and focus on the potential of this being a reaccumulation range. So here, this in my opinion would be your primary or your selling climax. This is your primary support back up here. Now, again, the trading range itself, you could make the argument that we're going to come back down here for a spring, and that this is just your basically phase B, and that's a pretty good argument. Like if you were just looking at the structure, that's a pretty good argument. But one of the things that's important here was, okay, as we get closer, these defining lines become more visible. Here, primary support, selling climax. Again, you got to look at the volume signature for each of these plays. Automatic rally was not actually this high. This was not the automatic rally, and this is what we went over with Todd as well. Was where do you put your automatic rally? So let's just mark these out. So we'll go preliminary support right here. Again, highlighted by these massive amounts of supply signature coming in. Selling climax also highlighted by the massive amount of supply coming into the market. Now, what's interesting, and this is where I think they made a mistake, is that this is most likely the automatic rally. So this would be your secondary automatic rally. This is actually where phase B would have started here, this huge move through the box, and you could call this a secondary test of the top. But nonetheless, I think that this was your secondary test, and this was your spring. Now, I believe this was a low volume spring. We had seen this in a few assets across the way, and it does line up with other areas of where the spring would be, approximately between October and November. Now, this is what's difficult, is that this means phase A, in my opinion, ended here. Effectively, phase B and ended here with your secondary test. Your spring in phase C had already taken place. You had your test outside of the box, your first run up against the creek, a jump against the creek, and then this is your first kind of back up against the creek. So just kind of for fun, what that would look like if we drew it in here. We would take our spring. This would become your first jump across the creek, or a micro SOS is another way to kind of target it. SOS is usually break all the way above, and that here we are right now at a backup phase. Now this backup phase is also above the top of the creek. So we're in a crucial area right now, noted by the 200 simple day moving average. Again, touch the creek, couldn't come back, move above, came for a backup, and this is where I believe we go into an SOS phase into the 4,300 mark. So even though, again, on the daily, it's hard to tell where you are in the beginning of a market, this moment was a big change of character. It was more visible on Bitcoin. In my opinion, the S&P 500 I don't think is as clear, but this would bring us to a pretty quick move, which would go up to around 44 and hit 4,800, and then probably come all the way back down. And this is what I suspect we'll get. We'll get these smaller accumulation ranges that end up leading to much bigger accumulation or distribution schematic. We won't know yet. It could very well be a distribution schematic because, again, if you go to the weekly, you know that we spent over a decade in an accumulation period. So we have a decade of accumulation and then a nice bull market from 2012 basically up to today. And I suggest that that bull market's over. Now, the final stages here, just like we saw with Bitcoin, it came down, had an accumulation range, then shot back up into previous all-time highs before coming back down. And I suspect we're going to get a trading range here. Now, that's where I think it could become distributional and could be one of the biggest havocs we've ever seen within the market. But I don't think that's going to happen now. It could, but I don't think it will, just because of how much time it took to get up here in the first place. A lot of Wyckoff's old methodologies included something called the point in figure chart. Awesome. Sorry, just checking out your guys' thoughts on the chat. So now we're coming back down to the 200 moving average on the daily, and we're holding right on the back of that effectively. So this is crucial. We're in crucial areas right now to find out, was this a spring? Was this a low volume spring based off the selling climax and the primary support? Or it looks like we're in a kind of a backup trading range. I suspect we'll get some strong support out of the S&P 500 over the coming week. But let's take a look at the closer time frames and go down to the hour. On the hour, we've reset the RSI as well. So we are all the way back down into totally oversold territory at around 27 here. So that's a good sign that we are kind of reaching that climax. And supply has dwindled here. It's actually reducing now. So from the previous selling point the other day on, I guess this was Friday the 17th, to where we are today, we've had a reduction in the selling supply. Even though it's not huge, it's still a reduction. So there are a few signs, again, that lead me to believe that we are in the backup phases of the micro SOS base, both for the S&P 500 and for Bitcoin. But if we get invalidated here, we'll know real quick, and then that will be a time to change my personal thoughts on this. But for now, again, even with Bitcoin here, let's go back. There's the trading range we were following. This supply is actually still decreasing at the moment. On the 1 hour here, it's going down finally. After a multiple day increase into the selling pressure. This is actually also a positive thing because it leads into the spring, most likely. Not a very bullish momentum though either. So if we're not starting a new bull market by any means, otherwise there's no way this much supply would have came in, but it still has the potential to bring us much higher. So the fact that we are rising in supply, but slowing down here in our price spread, again, is ultimately a bullish indicator. So nothing out of the ordinary or broken yet, but if we try to come back above, can't get to the $24,700 area and break down here, then we could be coming much lower. So we'll know in the next few days what we get based off that sentiment. Ultimately, I'm still bullish. Awesome. So let's take a look at a few other charts on the markets right now. Well, let's go down and take a look at Ape token. Ape token's another one we've been following quite closely. I suspect that we are in an accumulation range. Again, primary selling or preliminary support and the selling climax, both highlighted by volume. Low volume spring here, which was quite nice. And then a continual declination of supply throughout the trading range. And even though a bit more has come in to mark this selling point, it's not a huge amount. It's not more than the SOS supply that we signatures that we got back here. So ultimately, there's a few things across the board that still look bullish. We're holding the 200-day moving average here pretty well. We're hovering right around it, this red line that draws through basically here. We're just below it. But again, on the daily, we are pouncing into divergence as well. So on the hourly here, you can see descending price. What is going on? Why does that happen? Yeah, descending price. And then here, rising RSI. So you do have some bullish divergence on the hourly here for Ape. Same thing with Bitcoin, although it's more clearly defined here. Ultimately, I think we're still bullish, at least for the next 90 days. Nothing's invalidated that yet, but it's definitely getting closer to that point where I'm like, oh, this doesn't look as good as it did 5 to 10 days ago when everything was, when Ape was back at $4.30. But at the middle of the trading range here, we don't want to make too many early assumptions on direction. Again, because we're about to reset the RSI here on the 1 hour, I would look for it to get oversold again before I was too excited about the directional choice here of the market. So everything effectively looks good still. I'm not going to change my direction. Oh yeah, Ape is the ticker. I was looking at ApeCoin. I guess I could drag my face over there for you guys, if that helps. Although I guess it kind of ruins the RSI. You can't, I'll just have to blow it up over here. Okay. Yeah, so again, on the 1 hour and the 45-minute, you are starting to see some bullish divergence on the RSI. We're going to want to break over the point of control. We need to get back above $5.68 for Ape and around $24,700 for Bitcoin. Those are the kind of the reclamations of this trading range we'd be excited about. And again, here on the 45-minute, we've totally reset, although we did, no bullish divergence on Bitcoin, but we did reset the RSI, which is positive in my books, and it looks like we're about to turn around here too. So yeah, and we tested the bottom here the whole way down of the oversold area, like on the 15-minute, bang, 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 bang. Keep testing oversold to draw out the market. There's a huge amount of shorts that are coming in, I'm assuming, to try to take the value acquisition to the downside. So we could see a huge short squeeze. A spring again could dip as low as $23,300, so it could still go a little bit lower here, but everything looks good. Let's see how the dollar is doing today. Ooh, dollar finding strength today. We're never excited about when the dollar finds strength. We did see some divergence on the daily that apparently has been basically totally washed out already. So let's get a little bit of a closer look here. So we're now looking at the dollar. It's actually looking pretty good for the dollar. I mean, it's not a great sign for other things potentially. So yeah, we did see some slight hidden divergence here for the dollar and the RSI, but nothing too huge. Did we reset on the lower time frames? We almost reset the price on the lower time frames. We just couldn't get back down there. It'll be interesting to see here. If the dollar starts to find positive momentum, it's probably not going to bode well for the rest of our ecosystem. So this is kind of like a two-part bet. Do we have a breakdown of the dollar if we break below 103.5? Or do we start to break above the trading range in 105? If we break above and try to see some type of automatic reaction here with the dollar, it could bode negatively as well. So there are a few aligning things to say, hey, we could go higher, but there is this dollar and Fed story that makes a huge difference for liquidity in the market. Now, one of the things is nice about Bitcoin is there's a heck of a lot less people here that are buying on margin, as in comparison with like housing or S&P 500 or equities. A lot more people use debt and leverage to buy in that ecosystem. It's also important to note we are just about to try to test the 200 simple day moving average, which we've been above since June 21st. And usually once we stay below it for a little bit and try to test it. So if we test it here, we could be coming a lot lower for the dollar to test at least the previous range of 90, 99 there. So we're kind of right in the middle of the range for the dollar. It could go either way. I wouldn't want to make too many assumptions yet. So we'll keep a close eye. We'll make sure we're close to the live stream so we can jump on and or off with you guys really quickly if need be over the next 48 hours. Because again, I think this is kind of one of the final indicators for this trading range that we're in right here. Again, rising supply signature on the sell side, and we're still basically in a reduced price spread. So it looks bullish, both price and supply signature, but right at the last part of this trading range is where they change and can change quickly. So we'll have to keep a very, very close eye on that thought. Let's see. YouTube has been showing me some of your 5-year-old content from plant medicine. I love it. Awesome. Thanks for that. Be sure to watch all my videos about ayahuasca and mushrooms, some of my other favorite investments. Todd M says, in the last few months, Alibaba, Amazon, Spotify, Tencent, best project, Avex is on fire, price will catch up. Yeah, there's lots of enterprise positions that are taking place here as well. Oh, and there's an FOMC meeting in a few hours. Oh God, yeah, FOMC. Actually, when we've seen negative reactions just before the FOMC meeting, they've usually gone positive right afterwards, and it's done the opposite. When they're positive before the FOMC meeting is when they go negative. So the fact that we're negative before the FOMC meeting is maybe actually a bullish indicator from what we might be able to tell. I wanted to Avalanche is another one of our favorite positions here. On the daily, it appears to be doing something very similar. I think we were just finished through a falling wedge. We've had our low volume spring right here, which was quite nice. And then our first kind of move outside of the box and testing before we go into micro SOS phase. So I think it could bring us to $30 for Avalanche. Again, the kind of leading indicator here is that we do have a few assets that have already totally completed breakout phases. So Fetch, as an example, from the bottom of our trading range, once it broke out above into the middle of the trading range here, it basically had a no bar hold before it was off to the races very quickly, back up, and then we just went straight up and outside of the box for basically a 10x gain on Fetch. Magic did the same thing. So these to me are the leading indicators of what will happen next within Bitcoin. Now, it's not a great way to say, hey, these things have already started a bull market move. Everything else is going to start a bull market move. Okay, sorry, here's Magic. So both Magic and Fetch have made these huge moves outside of their trading range. So with Fetch, you can see a silent climax. Here's your first automatic rally, and again, separate than this move through the top of the box, which is a mistake I think people are making with the S&P 500, is that phase A ended right here with a very quick automatic rally. So I believe that's where that mistake was made. And this second move into the box is actually phase B and phase C. And see, phase C here was justified because as soon as you went out of phase C into phase D, you started a whole fucking bull market for Fetch that is equivalent to, I think it's over a 10x from the spring to the top at this point. We have to chop the screen down here a little bit so we can see everything. But yeah, basically from the spring already, you've had a 10x in Fetch. So the fact that we've seen a bull market continuation in multiple other assets, again, leads me to believe that that's what we're going to see in the other assets. Now, it's not a great, again, you should never really do this. You should never be like, oh, I'm going to judge the future based off everything that's already happened. It doesn't always work that way. There are a lot of indicators to make me think that was the case. Same thing here with Link, selling climax. automatic or primary support, selling climax, automatic rally. And then again, notice how you have these secondary tests of the top of the market that are not the automatic rally twice here. This is more of a test of the top of the creek, effectively. So those are the indicators to me that say, hey, we've already finished the spring. We're not looking for that spring. And again, when people are sharing just like financial structure without sharing the volume or support signatures, I think it's an indicator that they don't know what they're talking about for Wyckoff. Now, I don't claim to know what I'm talking about with this either. I'm studying and learning, but to me, the demand and supply signatures are as important, if not more important, than the supply or the trading range structure itself. If you're just using the trading range structure, you're missing more than half of the story. Probably 51% of the story is actually held in the price and supply signature aspect, not just the horizontal trading range. So you have to make sure you're combining both of those two together. And then there, I think you get a much clearer picture about the fact that we have already had the spring, already had the test, and are into the micro SOS. Again, based off the demand and supply signature here, it looks pretty clear to me, at least, that this reduction in supply moving throughout the micro SOS was in fact exactly where we are, and not a range test, which some people currently claim it to be. Now, I could be wrong, and it'll be great to learn that lesson and figure out if I did something wrong. But to me, this last little bit here where we had the declining supply signature on below the SOS and micro SOS into this LPS and SOS phase, those are both two, here we go, both two leading bullish indicators. So again, declining price throughout the micro SOS, LPS, and then SOS with just a little bit of supply coming into the market and not a ton. So all that says bullish to me. I'm not going to change my thesis until something breaks that down, and it could. Again, on the 45-minute here, we could see that, but ultimately I don't think that's what's going to happen today. So keep a close eye on it, because if it is going to turn around, it's going to turn around here in this last little bit when we can't break back above 24,700, and we could come back down a lot lower if that's the case. But for now, this rising signature and reduction in price spread, it looks bullish to me as well. So I'm going to leave it that way. We'll drop in and take a look at a few of your guys' thoughts and questions. There's the BTC gap at 19,000. Cool. We could come back. Oh yeah, I reshared the chart there. You guys got to see the chart, right? Yeah. Okay. Good. Yeah, a lot of people are looking at that gap at 19,900, and we may come back down to fill that in the future. If you followed my longer term thesis of what I think is happening, look at it this way. Back here when we had, this is another great example of a mid-range accumulation channel. So here, with Bitcoin, I hate when it does this. Come on, let me draw my damn green line. There we go. Okay. So here, with Bitcoin as well, you had your selling climax, and notice this absurd amount of signature that came into play here. You had a secondary test marked here by the bottom of the spring, as well as the supply signature of the sell and the buy at the same time. You also had a really low volume spring. And then your first SOS was this sign of strength of both of the supply signature moving us outside of the top of the trading range, which was the micro SOS, and then the backup phase before moving into an SOS and then one more backup. Notice how this was also the jump across the creek and tested the creek, the 200-day moving average, and then back a jump and to test the creek again, the 200-day moving average. But this little reaccumulation range, this spring here, many people were very bearish. They were very bearish here too. And we had almost pretty much a doubling of Bitcoin's price from the spring at around 29,000. So these trading ranges can be very short, and they don't lead to a forever bull market, right? So here you had from selling climax, let's measure from selling why does it keep clicking off? From selling climax to first breakout was 80 days effectively of accumulation. And then from that 80 days of accumulation outside the box, you had approximately 90 days of upwards before we went down, 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 down. So here, if we're correct in our assertion, the fact that we've had from primary support to SOS, 250 days of accumulation. We could guess between 90 to 180 days of upward cycle. So I think that brings us to around 40 grand. And then what we do is we break up, we effectively break up here. We go up to around 45, maybe even touch 46,000, have a distributional cycle, and then we could come down to fill that $19,000 gap and then form another trading range before we break outside the box and come to new all-time highs in mid of 2024. So this is what we saw in 2017. This is what we saw in 2013. This is what we saw in 2011. Is basically two separated or multiple separated trading ranges that again eventually came out to be a much larger trading range in its entirety. So oh fuck, did I do it again? No, my girlfriend is not paying attention to me posting videos. That's a true story. Yeah, I should have my phone by me so one of you guys can ping me here. So here's the larger story with Bitcoin. Again, gosh, I can't believe it's twice I deleted the chart. I should just leave the chart on forever once I press the button. I gotta have this chart. There we go. Once it's the chat screen. I can only see with the chat screen. So, yeah. Let's go back here just to reiterate what I was saying. I can't believe I left the chart closed for this. So again, here we had a reaccumulation, selling climax marked by a huge amount of volume that came into the market, secondary test by both the buying and the selling, low volume spring, approximately 80 days through this entire range, and then approximately 90 days to the upside as well. So if we have 200 days of accumulation here, we can expect maybe about 100 to 200 days of upcycle. So I think that's where we are. This could ultimately be distributional, and if it is, oh my dear God, like Bitcoin's done for a while. Like if we come up here and we start to turn around and we can't get back above like the 18 grand, you could come all the way back down to 5 or 6 grand for Bitcoin. Now, I don't think that's the case. I'm not betting on that. Just know that if we enter into like unmarked territory of fear here again, you could see much lower prices for literally every asset known to man. I think the criminals are going to fight that. I think they're going to use the price as a distraction. I think the markets are going to continue to pump to the upwards so they can hide some more of their crimes. But effectively, again, these accumulation cycles, we've got 200 days into this accumulation cycle. From what I can tell, we'll probably get about 100 days out of it. And again, here, the chart I was just speaking about was we had an accumulation cycle right here for your selling climax, secondary test, low volume spring, jump across the creek, and back up, an SOS with a backup, and then that last bit. So from where Bitcoin is today, it could do something very similar. SOS into 38 grand, back up into 25,000, SOS to 42,000, and then all the way back down to 19 grand. No problem. So that if we are going to fill that $19,000 gap, I suspect that's where it will be, is in the formation of a much larger trading range. And then you could one day just think that this entire thing was a selling climax. And that's what happened in Bitcoin in 2017 as well. Bitcoin 2017, at least in my opinion, this first trading range that we had at the bottom was actually just the selling climax of a much larger trading range that took place months and months afterwards. But here you had approximately 131 days of accumulation, followed by a 100 days of upside. So almost equivalent. Accumulation and upside were almost equivalent. So 120 days of accumulation, basically 100 days of upside. So if we're at 240 days of accumulation, let's say 100 days of upside. And how many days of this upside are we into it already? God damn, I don't know why it does that. I'm sure one of you probably is smarter than me and knows why it does that. Why is it when I click on something, it just will get rid of it? Okay, here we go. We're 40 days into this. So another 50 days, 60 days, and we could be at the top of the box at 45,000. And that's kind of the rough estimate of where I think we are. I don't think this divergence on the daily makes any difference at the moment, because I believe we're going to get back into oversold territory and probably retest the highs for that at the moment. And it's clear on the 1 hour that we've basically totally reset the RSI. So Just my thoughts. Let's take a look here in the 15-minute and get a closer view. Yeah, really trying to test the bottom of this range here. Massive chunk of supply, and we're actually not getting that huge of a reaction either. Again, I'll point that out one more time, is that considering how much supply just came into the market, how many times do I have to re-click this shit? Jesus. This supply coming into the market, and this is not that big of a price reaction. Again, if you compare this price spread and this price spread and this reaction, they're basically the same, except you have more supply coming into the market here by almost a few chunks. So this price spread, this supply, this price spread, and this supply are almost equivalent. So that means we're running out of steam and we are getting absorption throughout this, and we're still in the middle of the trading range effectively. So do we get that last little spring of our reaccumulation outside of the end of the box here? Very similar to schematic number 2. That is what I suspect that we're going to get here. And it could dip a little bit. It could dip a little bit lower. It could dip down to like that $23,000 area. So keep a close eye on it. Anyways, that's probably almost an hour of conversation. 15 minutes where I screwed up and had to redo the charts. Awesome. Hey, are you going to do some videos back in the day like at the waterfall with music? Okay, I will do that. I will start to get out and do more pontification videos. Oh yeah, I have to look to the right screen. You guys have learned this one. It's when I look at the comments on the right screen, I change the screen, I forget to look back. All I can see is the comments and forgot that I haven't done that. So thanks for being patient while I figure out how to live stream. Mr. Hart teaches says, I think you should be focusing more on the DXY than Bitcoin or the bonds or yields. That often will make a lot of sense, but we are getting into a unique area for Bitcoin. It's reacted very positively. So it's hard to say. You know, the dollar is a great indicator for overall market sentiments, but they're not directly correlated like a lot of people think. I mean, we can find lots of specific moments where they're exactly the opposite of that correlation. But again, the federal funds interest rates, people just them giving out free money to average people, that clearly makes a difference in all asset classes, which is why we had such a bull market in the middle of a pandemic. There was no interest rates and they were printing money at a fucking ridiculous level. So we clearly know that the printing of money makes a huge difference in all assets, because that's what inflation is. When they print money, the asset prices go up and they are reflected positively by inflation. This new inflation that they're talking about, which is the more expensive gas and food because of a war in Russia, isn't actually inflation that has anything to do with the interest rates. It's totally bullshit, basically. The reason why the price of things have gone up is because the supply chain is reduced. It's more expensive to get these goods because you're not being able to ship gas from Russia, which is usually a huge chunk of the supply. I think it's like 20 to 30% of the entire world's fucking fuel supply. So those things to me create inflation, not the direct monetary printing was creating the inflation all the way up. It's why Bitcoin got to $60-something thousand in the first place. This inflation that they think they're battling now really has nothing to do with the Federal Reserve, has nothing to do with the US dollar. And if they keep pushing, what they're going to end up with is an enormous recession with people that have no jobs. And I don't think they want that to happen either. They need to keep people happy and distracted. So I do suspect that we're going to see that money printer go on here again soon. I mean, they're already saying they're going to pay for the pensions of people in Ukraine. So they are printing money. They're just not giving it to you this time. They're giving it to some other fucking corrupt criminal government. So there's that. It's last time it was you guys in the middle of now it's not you guys. Anyways, we appreciate all your guys' support. I'll come back this evening and double check back in, because again, we want to make sure that this next check of this reaccumulation range gets us back above 25,000. If it doesn't, we could be coming down to retest lower. So be more defensive. For now, though, everything looks great. And we're holding and trying to close just above that trading range again, too, on multiple assets. So we'll keep it at that. Rinky Doink says, my energy and price doubled before Russia touched Ukraine. Awesome. Yeah, they were putting a lot of restrictions on Russia before like the war started effectively. the United States was not playing fair with NATO. They were doing everything wrong, basically. So they were creating supply chain restrictions and reductions before the war technically started. Whatever, that doesn't make a whole lot of sense. Mr. Hart says, I look at the Fed like market makers. They're definitely the market makers. They give out the money. Retail put in the stock market and crypto. Yeah, but markets aren't moved by retail. Markets are at the very end brought in by retail. So that's usually not it's usually not the best way to look at it. And they don't want the price to go lower because then more people will be more upset and then more likely to riot. I think that we are dealing with criminals who are in charge of the monetary supply. So they're going to do everything in their power to basically hop up the markets on drugs again, so people are distracted, confused, and don't give a shit about the fact that criminals have basically tried to take over the Western democracies around the world. That's the real war we're in. I don't give a fuck about Russia. As far as I can tell, I'm rooting for Putin. He seems like an enemy of my enemy is my friend, because we're in a war against the globalists, not against Russia. If you can't tell that yet, it's because your IQ is somewhere in the middle of the fucking bell curve, nowhere near. Apparently. Let's see. Yeah, blame windmills and Greta. That's probably a great way to go. The climate change narrative is a total scam. Anyone with the basic scientific research skills can prove that to themselves. And when did it ever become a bad idea to do your own research? Like, I remember for decades, guys, hey, do your own research. Come to your own conclusions. Make sense of the data yourself. Now, apparently, no one's smart enough to look at data. So it's either you're in the middle of the bell curve, or you're too stupid to know any better, or you're on either end of it and you know that you should be doing your research. Or you've already done it. Anyways, we'll keep it at that. I appreciate you guys. We'll see you again. I'll try to come back this evening just to see where we are and touch base, because it looks like we're in a critical place. I still stand by my thesis that this accumulation of the bottom of the channel has taken place, and we're going to see higher. But just in case I'm wrong, we'll jump back on and see you guys again soon. This is Teal with the Arcane